Hey everybody, welcome back. We are finishing up our discussion about production costs by looking at profit and profit maximization. And our goal here is to be able to explain the difference between what are known as implicit and explicit costs, which will help us be able to calculate and define the difference between what is known as accounting profit and economic profit. And we'll be able to identify the rule for identifying the profit maximizing amount of production or the profit maximizing rule in all of economics. So we start by asking, what is profit? Profit is the difference between total revenue, the amount of money collected, minus our total costs. So total revenue is calculated by multiplying price times quantity. Price of the good times the number of goods being sold tells us how much money in total came in. And then we will subtract from total revenue total costs. And as we're going to see in a second, there's two different types of total costs that can be considered. One is explicit cost and one is implicit cost. If your profit is positive, then you're essentially making more money than you started with. If you have a negative profit, that's an indication of a loss. So positive profit equals a gain, negative profit equals loss. Now, another part of the equation here is the concept of marginal revenue. That is, how much does total revenue increase by with one more unit of output or one more sale? And so, like all things economics, marginal equals change. So marginal revenue equals change in total revenue over change in quantity. And you will have to be careful when you're looking at tables because it's not always true that quantity increases by one every time. So you'll have to divide the change in total revenue by that change in quantity. So just be careful when you look at the tables. Implicit versus explicit costs are pretty important. Explicit costs are costs that you pay out of pocket, that you actually are giving money for. There's an actual payment involved with explicit costs. Implicit costs are measuring what you are giving up. That is, what are your opportunity costs? What could you have had if you did a different decision? Explicit costs are pretty easy for most of us because we experience them on a daily basis. Implicit costs do cause some level of confusion, but they are extraordinarily important in our conversation about profit. We could look at the cost of attending college and could say, well, which of these are explicit in nature? Because there's lots of different costs associated: books, computers, dorm supplies, room and board. The fact that you could be working at a place like Wawa or something, earning money. The fact that you could be doing something else with your time, like playing video games or getting on TikTok. Lots of other things that you could be doing with your time other than going to school. So if we're trying to figure out the costs of college, we're going to split out explicit versus implicit. So take a second and think about, based on our conversation, which of these do you believe are explicit in nature? Just press pause, and then when you're ready, press play again, and we'll see if you're right. Explicit costs are those that we actually pay for with actual money. So if we're talking about the explicit costs of attending college, we're talking about things like books and computers, tuition, dorm supplies, room and board. There are bills for each one of those, and you have to give actual money to pay for them. Wages at Wawa or wherever it is you work, you're not actually paying that to anybody. You're getting paid those wages, but you are losing out on the opportunity to earn that money if you're moving away from the job you had in your hometown and then go to school somewhere else. And gaming time, you're not paying someone, but you are losing out on the value of your time when you were enjoying playing Call of Duty or whatever it is that you were playing. But now you can't because you're dedicated to your academic successes, and so now you're studying and not playing video games. So wages in gaming are costs. There's something we're giving up, but it's theoretical cost. It's not actually leaving my bank account, but it is something I am giving up, and it is an important part of our decision making. So when it comes to profit, there are two different types of profit. There is what we call economic profit and accounting profit. Accounting profit is the one on the right, and that's the one that most people are familiar with. We take our total revenue, We subtract out the explicit costs and we look and see how much is left over, and we call that profit. So the company was in business, it earned $1 million in sales, it had $200,000 worth of expenses to pay for rent and for employees and things like that. So at the end of the day, the accounting profit is $800,000, which is great, right? Lots of money. But it's not what we care about in economics too frequently, because what we are concerned about is what's called economic profit. Economic profit takes into account not just our explicit costs, but what we could have had if we did something differently. So what are our opportunity costs? And then we look and see what's left over, and what's left over is our economic profit. It's basically saying, how much more money am I earning compared to my next best alternative? So let's look at an example. Let's pretend that Fancy Foods is a restaurant and it earns $100,000 in revenue. There are $60,000 in explicit costs. The equipment has $5,000 worth of depreciation on it because it's getting used up and approaching its end of its usable life. And so at the end of the day, Fancy Foods earned $35,000 in profit, which looks great. $35,000, pretty good for a real small restaurant. More money than we started with. What's to argue with that, right? Why don't we like that? Well, that's accounting profit, and it's great, but it doesn't tell us if the decision we made was the best possible decision, which is what we care about in economics, right? We're about profit maximization. Do I have the biggest profit possible? Because we could look and say, all right, the accounting profit is 35,000, but I could have instead, worked a job on my own and not relied on the restaurant, in which case I would have been paid $34,000 in salaries. And I could have taken the equipment, the capital that I'm using in my restaurant, which I own, and leased it to somebody else and got $3,000 from them for leasing that equipment. So I didn't use it, but somebody else did, and they paid me for it. So really what I'm saying here is I could have earned $37,000 on my own if I had never opened up the restaurant, compared to $35,000 that I earned when I did open the restaurant. So those opportunity costs, when they get taken into account, I didn't make a $35,000 profit. I had a $2,000 loss. That's telling me, the economic profit is telling me I did not make the optimal choice. I could be better off if I had done something else differently. So when we're looking at economic profit, profit greater than zero says I'm doing better than my next best choice. If I have a profit less than zero, it means that I am doing worse than my next best choice. So in the case of Fancy Foods, I have a negative $2,000 profit, which means if I did something differently, I would earn $2,000 more than I am running my restaurant. If profit is zero, then we say it's no better or worse than my next best choice, and we refer to that as having normal profit. And that term normal profit will be important when we start looking at perfect competition. We could look at another example. There is a restaurant in Washington, D.C. It's located in an alley, and it's called the Well-Dressed Burrito. And for a long time, it was only open during lunch, and it had a very loyal customer base, and there were lots and lots of people coming in and out. They were only really open from like 11 to 2. And they made tons of money during the day. And the question was, should they expand their hours and be open for dinner? Well, maybe, because they're making tons of money at lunch, but what are the opportunity costs? And in the case of the Well-Dressed Burrito, they had some significant opportunity costs because they were a catering company. And so they had a lot of business for catering at night for various functions in offices and on Capitol Hill. And so they could open a restaurant and be open at night, but there aren't a whole lot of people that are working in their offices in downtown DC at night looking for a place to eat dinner. They could open and they could do that and they could get some sales, or they could close during the night and only focus on catering, which has a higher profit at night and provides them with even more revenue. And so there is that sort of tension. They could earn an accounting profit being open at night, but That accounting profit might not be as high as if they had been caterers. So that would indicate that they have a negative economic profit if they were to stay open longer hours. The good news for those of us who like the well-dressed burrito is that they figured out how to not only expand their client base at night, but also still do the catering, so they're actually open longer than they used to be. And so that's good news. So if you ever find yourself in DC during the day or even at night, look for the well-dressed burrito. It's located in an alley, and you will thank me for it. That's a wonderful meal. But back to econ. When it comes to determining what our optimal behavior should be, when we're looking at deciding how far should we go, we're looking to meet this rule, the optimal output rule. Marginal revenue equals marginal cost. That will be the time when we can no longer add to our total benefit. And so when that condition exists, we know that we're maximizing profit. If we are not at a point where marginal revenue equals marginal cost, we are not optimizing. Now, this does cause people some confusion because they'll say, well, why do I want it to be equal? Wouldn't I want marginal revenue to be greater than marginal cost? Yeah, we would. We would love that because that means that I'm bringing in profit. But you have to keep in mind that everything in economics is marginal, that's incremental. So should I produce 1 unit? Yes, on this graph, I should produce 1 unit because costs are less than revenue. And so that is a profit for me. Should I make 2 units? Yes, I should, because that marginal cost is less than marginal revenue, and that net profit is being added to my total profit. So my total profit is bigger when I produce 2 units than when I produce 1. Should I produce 3 units? Yes, same thing. Marginal cost is less than marginal revenue. So that net profit on the 3rd unit is being added to the total profit I've accumulated from the first 2 units of production. And I keep going through this process till I get to the 5th unit. At the 5th unit, the amount coming in is equal to the amount going out. So I'm not hurting profit, I'm not helping it, but I'm not hurting it. I'm indifferent. And in economics, we continue to behave until we get hurt. So that 5th unit is not taking away, but it's not adding. That's the maximum we can have for profit because all the previous units of the goods we've sold have been adding to the total profit. If I produce more, it'll start taking away. So if we look at a chart like this, we say, well, how many units should we make? How much should we produce in order to maximize our profit? We would look and say, the marginal revenue is $10. It appears to be the same for every unit we sell. And so should the 4th unit be made? Yes. $3 in costs, $10 in profit or revenue means it's a $7 net profit. Should I make the 5th? Yes. $5 in marginal cost, $10 in revenue. That's a $5 net profit added to the $7 in net profit I had for 4 units. It means I have a much bigger profit total by going from 4 units to 5. And I'll keep doing that process until I get to 7 units. That is the last place where marginal revenue is either greater than or equal to marginal cost. If I make 8 units, it'll cost me more to make it than I'll earn. I would never pay $11 to get $10 back. That would be counterproductive. That would be silly. So I won't produce 8 units, but I will produce 7, and that will be the greatest possible profit for me as a firm. Final thing on costs here is this. The difference between explicit and implicit costs is somewhat confusing to people from time to time. Moving forward for the rest of this course, we will assume that all cost figures incorporate both explicit and implicit costs. So from here on out, we will only be dealing with economic profit. So anytime you hear that phrase profit moving forward, it means that we are either positive economic profit, doing better than our next best alternative, or a negative profit, doing worse than our next best alternative. We will not worry anymore after today about accounting profit. We will meet again next time and we will talk about different market structures, and I will talk to you then.